Welcome to our e-signal weekly Forex and futures forecast. My name is Jay Norris. I teach trading at Trading University. First market we're going to take a look at will be the Australian US dollar. There it is, Aussie USD. I painted a sell zone on there. That'd be an area, a natural area of resistance on the chart where we'll take a shot at setting up shorts. Let me pan out to a weekly chart real quick. As I said last week, despite so many patterns having been down last week, I said, I'd rather wait for a second close below that significant level right there before I really went after that guy. And nothing has changed there. That's how it stands for me. And you can see you actually had an uptick here. You turn these two shorter term patterns, that 5 through 6 day and the 10 through 12 day, you turn those both higher there. No surprise there. I would have liked to see that second close, weekly close below that all important 69.22 level. You didn't get it, so get a little bit of a short covering setup, short covering squeeze. Definitely keep an eye on this area of the chart to set up shorts. Next market we'll take a look at will be the dollar Swiss. Extremely bullish chart. I'm a broken record on many of these currencies, and this is another one. We set it down here, trade of the decade. We set it in here, investment of the decade. Nothing has changed. Look at that guy. It keeps going higher and higher. Nothing holding it back, but that 60-day pattern is still down. Essentially, your 30-day grew into the 60-day. That's how it goes. Pattern in a market, a trend in a market, it's like a branch on a tree. It's either going to get stronger or it's going to get weaker and fall off. In this case, it continues to get stronger. So the shorter-term patterns are morphing into longer-term patterns, and that's a positive for this market. A little bit of resistance right there. It actually looks like you're going to close through it for the week, so that's a bullish event. I'd really want to see a second close above there before I can shift that 60 higher definitively, and then you have all the patterns higher. And what's really neat about that is, you haven't seen an extended move yet, so all your patterns are higher, yet the market's still curled up. So that tells me you got a lot of upside here. Definitely a potential breakout, and you'll see it in the next market here. Dollar index, boy, this is a beauty. I'll tell you why. There's a buy zone. We couldn't even get into it. We tagged it, a little double bottom on it. That's what we look for. Here's a beautiful setup here. Look at all the patterns. All the tradable patterns are higher, yet the market's all coiled up. Now, if all the patterns were higher after an extended move, then I'd be a little concerned. Maybe you can have a pullback. Here, they're not. They're all coiled up. So, to me, this market's a potential bubble in the making. Let's go to a weekly chart. I said it last week. I think it's going to bubble up here pretty good. Look at that. Everything's higher and you haven't even broken out, so just a ton of room on the upside. I think it's still safe to go in this guy. So dollar index, we think it's a bubble about to blow up, so plenty of upside there. Euro, if I'm saying the bubble if I'm saying the dollar is going to blow up, then that means the euro has to blow down, really by definition. Euro a little bit stubborn. That 60-day pattern holding up there. Here you can see this pattern is essentially bullish right there. Bam. Bam, you kind of see Mandelbrot's generator right there, so to speak. That's a bullish pattern. Once that, however, goes, look out. And we think it's gonna go. We don't think it's a matter of if, but when. So we love selling rallies in this market short term. So we think there's plenty of room on the downside for the euro. A little bit of support hold down there gave us a nice swing trade out of there. Hey, that could happen again too. Support. But overall, we think long-term, as far as your cash positions from an investor standpoint, you have to be short this guy just as you have to be long the U.S. dollar. Next market, we'll take a look at the stock market. You got a big double bottom in place in the stock market. There it is. You can see on our 50% level. Let me pan out to a weekly chart, and here's how we view this. We look at the breakout from the great double top in 2012 here. We'll just put a horizontal line on top of that great breakout right there. Back to the weekly chart. There it is. You can see the breakout from the great double top. Basically, we're taking the move of the breakout itself, and we're going to break that down into retracement. And there's your 50% retracement. And there's your two-third retracement. Two-thirds straight out of Dow theory. A market can retrace up to two-thirds and still maintain that primary pattern. So that's exactly how we're viewing the S&Ps here, the U.S. stock market. So this is a buy zone between the purple line and the green line. That's a buy zone. You have a bit of a double bottom in there, so we'll keep an eye on that. And pretty exciting stuff here. Granted, your primary, your secondary, your 50-day, they're all down. On the other hand, your long-term primary grand patterns, they're all up. So we're viewing this as a buy zone, and that's really our area of interest. I know it's a pretty big buy zone, but as I said last week, 1750, a shot at buying the S&Ps at 1750 if it holds too. I mean, momentum being momentum. If it slices right through there, I don't do anything. But if it gets down there, I start to see a shift of momentum back higher. That's about the only thing that would have me considering taking a little bit off the table of my long dollar position and going into the U.S. stock market at that level. So that's why we're revisiting the stock market again. Hey, let's hit gold. We missed gold last week. I just don't see it as a very exciting trading vehicle at all. Here's gold, typical gold. You turn the short-term patterns higher. You see that 5, that 10, well, technically the 6, the 12 we call them now. That gives us a little bit better numbers. Definitely, and our studies show that. So 5 to 6 day pattern, we'll call it a 6 day. 10 to 12, we'll call it a 12 day. At any rate, short-term patterns higher. Big deal. That's what that market does all the time. It shifts to short-term patterns higher. All it does is put the market into a sell zone. So here you can see between that purple line and the orange line, there's a nice sell zone for us in gold. The big picture in the gold, it's a bear market. Again, I'm a broken record. And to me, you know what? Broken records are good, especially when you're right. If you're right, that's why you approach things as an investor. If you're right, stay on that one side of the market. Gold's a bear, pretty straightforward, right? If it's a bear market, you're going to sell rallies. Last market we'll take a look at will be U.S. interest rates, and we covered this last weekend. Nothing's changed here other than the market interest rates did find support there at those lower levels. Here's the ratio. As we said last week, you know what? Your short and your intermediate term patterns turned lower, in sympathy with weaker stock market. But guess what? Yeah, the 30 and the 60-day very important patterns, very tradable patterns turn lower, but bam, it stopped right on that secondary support. So it's really not significant if you get a 60-day pattern shift. If all it does is leave the market on secondary support holds. Long term, this is interest rates. Here's what we see. We think the market's carving out a long-term bottom. What do you think is going to happen when the stock market eventually does end this correction and turns higher? Well, you're going to see interest rates turn higher as well. Long-term interest rates, that is, turn higher in line with short-term interest rates after the Fed has raised that short-term Fed fund rate. So really nothing's changed for us. The chart of the week here, I'll go back to the dollar index. We think this is a bubble about to blow up. Here it is on the daily chart. Really pretty chart. A lot of upside. All the patterns higher, and you haven't even broken out yet. The market's still curling up, and you're in a position where everything's up. So that, to us, portends a big move on the upside. Viva the U.S. dollar. Thank you so much, and we'll see you next week.